Hi, I'm Chris Oos.
I'm Isaiah Aos, and this is the Aos-to-Aos podcast. Hey everybody, how's it going? Today we're talking about Warren Buffett's trading tips. Warren Buffett, if you don't know, is one of the world's richest men, and he made his fortune on the I almost said real estate, in the stock market, and he didn't do it by investing in crazy, tech companies. He did it in just investing consistently in companies that he believed in. So we're just going to go over his tips today. I just wanted to mention real quick that we are not financial advisors. This is not supposed to be financial advice. You can take this however you want to, but just know that this is for entertainment purposes. And if you take it as financial advice, do that at your own risk. These are tips that I personally want to follow and things like that. And I don't know, you at home, you might want to follow those tips as well. But just know that this is entertainment, and you should take everything and research it to find out if it's good for your own personal investments. So.
Absolutely. I think that's one of the things that Warren Buffett would tell you as well. I mean, you need to know what you're investing in. You need to do the research yourself. So, I mean, you can
Right.
talk to a bunch of different financial advisors, and they're all going to tell you a different story. So, doing the research yourself is going to help you make really informed decisions. So, really good
Right.
advice there. Warren Buffett is actually pretty unique. I mean, he's pretty much one of the richest men in the world, and he's made all his money by investing. And one of the things that he recommends that you do is find 3 companies that you love and invest heavily in those, which I think is probably pretty good advice. It kind of, on 2 scales, it brings you to a point where you're not, spread yourself too thin, investing in 100 different accounts or something like that. It gives you a chance to get to know those 3 companies and, get to know what they're all about and, feel comfortable in your investment. So, as the first one of his tips that he puts out there, I think it's probably one of the best tips because, it gives you a little bit of safety and security by actually just investing in 3 stocks. And, once you do find those 3 stocks too, your money isn't spread all over the place. So, you have a better chance of, getting a good return on your money.
Right, yeah. And I mean, it's not necessarily 3 stocks, but gives that advice for, regular people, but he does invest in more stocks. So, I mean, later on down the road, you can invest in more stocks, but this is like the safest way, basically, that he's describing. 3 stocks, the best, ones you can find in whatever industry you understand, and then, just invest heavily in those ones, and then you should be safe. For more passive investors, but of course he invests in quite a few companies. So this is kind of more tips for people who are just starting out and things like that. So yeah. So what? So sorry, you can go
I was
ahead.
going to say, it's, one of the things, I mean, we've talked about this on former podcasts, talking about, what we invest in, being comfortable with who the company is, making sure they're competitive, making sure you like their leadership and things like that. So, this is one of the themes you'll see. And, even if, as we're talking about Warren Buffett today, those are things that we use in our own investing as well, because, it's good advice.
Yeah.
It's good advice to feel comfortable with who you're investing with.
Yeah, and you're not just investing in a number or a stock, you're investing in a company, and you want to make sure that company is well run. We talked about this before with, some angel investing that I've done. You want to make sure that you're not only just investing in the name, the company, what they're doing, you're also investing in the CEO, what his past has been, or her past has been. You're also investing in, the leadership of the company, the management of the company, the financials of the company. You're investing in all this. You want to do your research because you could potentially lose all your money. There's risk involved with that. So yeah. The 3 stocks. What do you personally think about that? Again, this is not financial advice. This is what we personally think, and you can take this with a grain of salt.
Well, for me, my investment strategy is I mean, I try and find kind of a cornerstone stock, something that's going to be
Right.
stable, something that's going to grow, something that has potential to grow. Um, right now is kind of a really different time in the stock market with COVID-19 pandemic and the oil price
Yeah.
war and all that kind of stuff going on right now. My investment strategy has changed a little bit because I am actually investing in stocks that are at all-time lows right now, or the lowest they've been since I think 2008. So my investment strategy has changed a little bit. So like right now, my investment strategy is investing in a couple stable companies that are have a potential to grow and that have a stable history and that have a bright future. But I'm also investing right now in a lot of volatile stocks that are, I guess, in a way, a little bit of a long bet, maybe a little bit of a gamble. The danger in doing that, though, is like with one of my stocks, which is an oil and gas company. There's a potential they could go under business. So there is a lot of risk involved in there. One of the big companies right now that I'm investing in is American Airlines. American Airlines
Right.
is a stable company that's been around for a long time, but their stock, instead of being around that $20 to $30 range, is down right now right around $12. I bought in right around $7, so far it has been profitable, but that's also, I'm taking kind of a long bet on that, hoping that get back up into that $20 range. So that's my investment strategy right now. Long term, most of my stocks are buy and hold. I try and buy companies that I know a lot about. I bought quite a bit of securities, the company that I work for, because I know how they're run. I know a lot about their upper management. I know a lot about their vision going forward into the future. I have a lot of confidence in them. So that's what I would call regularly my cornerstone stock. That's the stock that I
Right.
buy that I have a lot of confidence in. I also invest into cryptocurrencies, things like that. Those are the ones that I'm speculating on a little bit, maybe doing a little bit of day trading, but I don't actually hold on to those long term. I'll take short profits, and then kind of move on to something else. So I'm always looking for that one stock, whether it be that Amazon or that Microsoft or Berkshire Hathaway or something like that, something that I can invest in now that's going to have the potential to make me financially independent in 10 years. Those are a lot of what I'm looking for. So I can't really say that I have three favorite stocks, but maybe you have a different strategy.
Yeah, I mean, well, it's not necessarily three, just you kind of want to get more into the world. I definitely have stocks that I hold in higher value than some of the other stocks I own. But I'll tell you right now, I own more than 20 stocks, or not more than 20 stocks, but more than 20 companies. And I definitely own more than 20 stocks in a lot of those companies. But things like Tesla, I love Tesla. Tesla's a great company, and it's only gonna get better from here, in my opinion, from what I've seen and what I researched. And I love the management, and I love the company's CEO, Elon Musk. He's gonna take the company in a great direction. Also, I was able to buy the stock at a very cheap price compared to where it was. It was almost like $1,000 a couple weeks ago, and I was able to buy it at I think it was $425. So I got a pretty good deal on that, and I was researching it, and they're expected to possibly go up between 1,000 and 15,000 by 2040. That you can take that with however much you want to, however much weight you want to, but from the sources, I particularly hold that in high value, for what they're saying and things like that. So, I mean, Tesla, I also like, Walmart. Walmart's going to be around forever, and different companies like that. McDonald's, Amazon, I invest in those as well. Berkshire Hathaway is a big one I invest in as well. We'll get into kind of more the interesting things about Berkshire Hathaway in a minute. But this next thing I have here, will you make less money in this kind of market? Is not in this kind of market, but investing in just three companies. Most people will probably say, hey, you only have three companies. How are you going to make a return rather than investing in 20 companies? Some of them might pay bigger dividends, things like that. How are you going to make more money? And what is your thoughts on that?
Well, I kind of got a mixed thought on that. I was actually talking about that. I'll be talking about that next week on my podcast. Mutual funds are a great way for investors. I mean, for someone who doesn't want to do single stock investing, mutual funds are a great way to kind of, invest in a package of stocks. Um, but so I mean, like there's that side of things. I guess what it comes down to for me is what money I'm investing. I have different investment accounts. Like I've got my 401k, that's all invested in mutual funds. So, I want that kind of diversified so that, like that money's there, that I can count on it, that it's going to be there during retirement. Um,
Right.
now, uh, when you look at stock market returns for mutual funds, they average, anywhere, depends on what you read, from 7 to 12%. So that's what I look at when I'm looking at, say, mutual fund. I look at their stock market history, I look at the fund manager, things like that. And even though there might be ups and downs in the fund itself, you can look at the historical returns on it for 1, 5, and 10 years on most of them. So you can actually see over 10 years what the historical return of that mutual fund has been. So that's what I look at with those. Now, with stocks, I think that you can still, I mean, with someone like, say, Ford. Ford is a pretty low value stock right now. It's right in the $5.30 range. So, say you had Ford and you had Tesla and you had Amazon. Um,
Which I own all of.
yeah, I, if you had those three stocks, I mean, you are going to see, you know, you're going to see those stocks go up with the economy. I mean, they are going to grow. It all depends on how deep you are into each of them. You know, even if you only have a few stocks, you're going to see a rate of return that, averages about the same as the stock market. Of course, it's going to fluctuate with news and with business management and business setbacks and things like that. But, you're still going to see that same rate of return. So I still think you can make money with them. But I still think that you have to have some kind of mix in them, maybe two stable stocks and one that has a little bit of volatility. Like if you look at Tesla right now, I think Elon Musk has the chance of either, you know, changing the world or falling flat on his face because he is a risk taker. I mean, look, he created
Right.
SpaceX and Tesla. I mean, if you ever wonder if Elon Musk is a risk taker, look at his new pickup design. I mean, like he likes to push the envelope and push the limits and stuff like that. So, if you have a stock like that in your portfolio, along with, say, Ford and American Airlines, you have a pretty good chance of making a pretty good profit. So, does that make sense? What I was trying to throw out there?
That that makes sense. Yeah, it makes a lot of sense. So one other tip that I have here is only invest in things that you understand. This is kind of goes off of what we were just talking about here. And some examples of like what I have here are, you know, uh, Walmart. I have worked for Walmart. I won't say where I work right now, but I have worked for Walmart. I understand the company, I understand the management, where they want to take it, and things like that. Just like you were talking about your Liberty stock, um, it's just something I understand and things like that. You don't want to invest in headlines. So if they said Walmart's going to go up so much whatever stock, or so much whatever in price, you don't want to say oh my gosh, I'm going to put my life savings in this unless you investigate and you think that's coming from a good source and things like that. This all helps you reduce risks by if you understand the company, things like that. You might, like, let's say however many years ago, 20 years ago, you researched Enron properly. Like a lot of people would have probably saved their retirement funds if they researched Enron properly. Like they hit it very well, but you know what I mean? Like they might be able to go in and say, this is a very competitive nature, but not structured properly. It's probably going to fail, things like that. So they could possibly get themselves out of that stock if they did their research. So it helps reduce risk and things like that. It also saves you time with extra research. So if you understand a certain field, you know what I mean? So if you understand technology, it's easier for you to determine if a technology stock is going to do well versus a new food company or something like that, like a new fast food company or something like that. So you have to understand the market and things like that. It also helps you find better deals if you just have a certain area, a window of where you want to research and things like that, say tech or whatever it is. You won't have the other stocks in your area that you have to sift through in order to find those technology stocks in order to find the best deal for you. So it narrows your field of vision so you can find better deals in a shorter amount of time. And also, as an investor, you own a business. You're not buying into the numbers, you're not buying into a name, you're buying into a business. So you wouldn't start a business that you didn't understand. I would never start not yet, unless I understood it. I would never start a technology business because I don't understand that very much. I'm not a technology person. I don't know coding, things like that. So why would I invest in technology besides like Tesla, because I've researched that? But like, why would I invest in technology when I wouldn't start a technology company? Because I really don't know how good that's going to be, unless you're talking about things like Apple, because they have a very good business model. If they sold cardboard boxes, they'd probably make a profit. So, I mean, things like that, they are a difference. So what do you think about in our current market today? Do these investment strategies that we've talked about, do you think that they work in today's market?
Um, that's a really interesting point, and it's something I've put a lot of thought into lately because, I mean, we've never dealt with this before. I mean, we've had things like SARS and MERS and things in the past, these worldwide, you know, viruses that went through the world, and they've never affected our economy like this is affecting it today. So, and we kind of got a double whammy with this one because we had the uprise of the virus, and then we had this oil and gas war going on, this price war between OPEC and Russia. So it kind of makes a really unique situation here where we've never dealt with this before.
Right.
This is kind of a twofold thing. I mean, everything on the stock market went down because of the virus, because everyone's concerned about what the impact on the economy is going to be. But then, the oil and gas industry has taken a double whammy because at the same time their prices have gone their prices have gone down as supply and storage has, gone up. So it makes kind of a really unique situation. So I think as an investor, you need to be willing and able to adjust to, conditions and to surprises like this. So in this situation, I think in a lot of ways our investment strategies need to have a little bit of an adjustment. I mean, like on long term, how Warren Buffett talks about it, investing in, stable stocks and researching and picking them is great advice. But in this situation, it's opened up a lot of opportunities. So maybe a company that you wouldn't generally invest in, you might, take a look at today, something that, so I don't know anything about the medical field, but there's a lot of companies out there right now that are, either in the medical supply, creating ventilators, things like that, or the, people creating vaccines for the COVID-19 disease. So, that's something that I've been doing a little bit of research in, but I don't understand a lot about, but I may end up investing in because, of this unique situation. So, I think that, our investment strategy has to have a little bit of leeway to expand and grow into some of the areas that we don't understand. So, yeah.
Right. Yeah, I mean, it depends on your situation too. Personally, I would probably say that I wouldn't want to invest in things that I don't fully understand or fully believe in, just because I don't really want to keep up with it as much. So I want to be able to buy stocks that if I didn't touch for 10 years, I would be fine. I wouldn't lose money on. So it depends on your current situation, depends on what your risk tolerance is and things like that, and how much you're willing to potentially lose, because it's always going to be a risk factor and things like that. So, yeah.
Absolutely. I mean, you got to be comfortable with what you're doing, no matter what it is. I mean, you know, one of the biggest things of advice out that I could put out there right now is never invest any money you can't afford to lose, whether or not you're putting that into a stable stock or you're speculating a little bit on, like an unknown stock. Make sure that whatever money you put in there, if you lose, you are not going to, feel it financially. It's not going to have an adverse effect on your finances. So I think that's a mistake a lot of people make, is they take money they don't have, and when they lose it, it sets them back in life. So whether or not that be, $100 or $1,000 or $100,000, make sure that if you lost that you're still going to be able to make it financially.
Yeah, for sure. So one of the next tip that we have here is, he says to be aggressive in tough times. This is kind of building off what you were saying. Just going into different markets that you may not necessarily go into if you have that risk tolerance and things like that. And also just if you have an extra amount of money, throwing it in there, not worrying about it, into stocks you believe in and things like that. So, what do you think about being aggressive in tough times such as these?
Absolutely. I mean, we kind of just touched on that. And if you are going to be aggressive, make sure that it's, money that you can afford to lose. So, I mean, I actually had some extra money in savings that I've transferred over to Robinhood. For those of you that don't know what Robinhood is, it's a trading app where you can trade without paying fees, and you can, actually get on there and trade your own stocks. Well, I had some extra money, so I transferred it over there, and I'm taking advantage of this because, I mean, there's a lot of stocks. One of the stocks I invested in recently was American Airlines. American Airlines is a company that's been around for a long time. Their stock is low right now because nobody's flying anywhere. Everyone's staying at home and stuff like that. So I looked at that stock when I bought that stock as, someday this is going to come back. Someday it's going to come back. It's going to come back stronger. It's going to be a good long-term hold. And this situation has given us an advantage to get into some stock that we may have missed out on earlier in life. I mean, for 3 months ago, to believe that I could get into American Airlines for $7 to $10, somebody would have looked at me like I was crazy, because at that time the stock was up around the $23 range. So this is a chance for me to be a little bit aggressive, make a little bit of extra money. Obviously with everything with stock market, nothing is guaranteed, but there's a lot more opportunities. I mean, if you are willing to be aggressive, and you can afford to be aggressive.
Yeah, and the stock market's so low right now, and it has been low this whole time. So being aggressive can really help you out in the future when the stock market goes up. We talked about this on past episodes. Usually, if you look at a chart after things like this happen, I mean, we've never seen this before, so you want to take care of your own risk and things like that. But after things like this happen, diseases, recession, stuff like that, it usually goes up, dips, and then you see the recession, and then it actually goes up higher. So buying up all these stocks that are so low right now, and then the economy bounces back and it gets to the point where you're actually making more of a return on your money than if you bought it before. This can be just a great way to build wealth. Can be. Remember that you have to invest in smart stocks and things like that, things that because it's potential that you can lose it all. So another thing that we have is having a long-term mindset. We've talked about this. It's investing in good companies long-term can make you very wealthy. This is what he said. I heard him say it so many times. And one way to reiterate this is, if you put $1,000 in his company, Berkshire Hathaway, I think it was in 1960, it would be worth over $6 million today. That's just a great example. And also, $50 in Uber, I think it was, I don't remember when it started. I think it was 2014, 2015, something like that. $50 in Uber would be $1.2 million today. I think that was the number. But it just goes to show you, holding stocks for long periods of time can make you a lot of money. Just because of the economics of it. And you can look at a very large amount of the largest stocks on the market right now. Go with Apple, Amazon, Tesla. Tesla came in, I can't remember what their share price was, but they have have reached many folds of what they were when they started out. Same thing with like Apple, Amazon, stuff like that. So, it's a very important tool if you're going to be investing. I mean, you can day trade and things like that. You can trade for small profits and things like that, but you're better off keeping it for the long term, in my opinion, because you have the potential to make a lot more in the long term than in the short term.
Absolutely, and you got to kind of have that mindset that you're collecting assets.
Yeah.
As you're doing this, I mean, you don't. I guess it depends on, again, your risk level, what you're willing to risk and stuff like that. If you want to do some day trading or trade, intra-week or something like that, I mean, this is a good opportunity for that. But for me, I think I'm a little bit more comfortable with buying low and holding, seeing where it's going to go. I think that I'm more comfortable with, with having at least some stocks that I hold long term.
Yeah. Right. Yeah, no, I mean, it depends also on the stock. Like you said, you trade cryptocurrency. That's not necessarily something you want to trade long term because you're mostly just betting on somebody paying a higher price the next time and then trading it for that price. So you don't necessarily want to hold that kind of thing for a very long time, but just traditional stocks such as Walmart, Tesla, stuff like that, you want to hold for a long time, and that's what I'm doing. And then kind of what builds off of that, and this is our final point, is you always want to have cash on hand for buying opportunities. And, it hasn't been more evident than just recently, having a savings account and things like that, and then being able to put more money into the stock market when all these prices crash can be a great buying opportunity, or just when specific stocks crash, like, if something crazy happened, like Elon Musk was arrested, Tesla's stock would drop dramatically, and then you could buy it up, and then when they get a new CEO in there, it can go up and things like that because it's a company that I believe in. So having extra cash on hand for buying opportunities, like you said before, you had a savings account and you were able to put more into it, is a great advantage. Do you agree?
I agree. And one of the things that I would say is when you are, say, going into some volatile stock, make sure that you're not putting all your eggs into one basket. Keeping yourself a little bit liquid through it. If you do want to do some day trading, make sure that you set a set percentage and you stick to that. A lot of what happens is people will try and hedge their losses, and they end up losing a large chunk of money because they're not being smart about it. If you keep some money back and stay liquid, you can at least recover from that long term. But if you put all your eggs into one basket in this market right now, you have the possibility of losing everything. So
Yeah, absolutely. Yeah, so that was our final point there. Do you have anything else to add?
no, I think that pretty much does it for what we wanted to talk about today. So I just want to thank everyone for joining us and for listening to the podcast. I hope you enjoyed the content.
Yeah, go ahead and leave a comment down below if you liked it. Go ahead and hit the subscribe button and leave a like. I hope you guys have been liking this new format. Go ahead and comment if you have any questions or concerns about that.
And click that bell icon so you're notified when we upload new videos. Thanks for joining us. Have a great day.
You have a great day.